We have another investment question from a young investor who presumably, doesn't have all the money in the world. They know it can be difficult at times to purchase some of the more household stock options, and they gave examples: Apple, Microsoft, Google, Walmart, very established Fortune 500 companies. And they mentioned that, a more affordable option is penny stocks. However, they ask if penny stocks are similar to cheap furniture, basically asking, do you get what you pay for with penny stocks?
Well, yes. The short answer is yes. I mean, okay, it's like people who go to Vegas, right? People go to Vegas, they go to Vegas when they have a really winning weekend in Vegas, you hear all about it, right? Oh my God, I went to Vegas. I only took $200. I came home with $5,000. You'll hear that from them for the rest of their lives. But you never hear about the other 300 weekends where they went to Vegas and they took $200 and they came home with nothing. In a lot of ways, that's the way it is with penny stocks. Yes, people sometimes do really well and make a lot of money off a penny stock. And I don't know the statistics, but I'm just going to throw out 9 times out of 10, you're probably not going to do real well. You're going to lose money. And, it, and it's not like a Google or an Apple where it can go, you buy it at 200, it goes to 150. No, you buy a penny stock at $2 and it goes to zero or close to it. So you lose your whole investment. So, the advice I've been giving people recently is you take 90% of your money and you put it in real stocks. The Google's, the Apple. And I know, yeah. Can look, Google's $200 a share now after the split or something like that. Think, oh, well, how much can I? Look at funds. We've done this before. We've looked at different mutual funds from companies, and you go and look at their holdings, and their holdings might be Google, Apple, Microsoft, on and on and on. And so, and you can buy into that fund for $40 a share. So in essence, buying all of those stocks at a price you can afford. So you take 90% of your money and do that. Then you take 10%, you say, hey, I'm going to do penny stocks because I'm going to make a fortune.
You're going to
And
find the 1 out of 10.
they're going to find the 1 out of 10 because I'm smarter than everybody else. And then after 5 years, you look and say, okay, which pile of money did better? The one I put over here in this fund or the one I put in the penny stocks? And yes, I know somebody's going to send an email saying, well, I did this and I made, lots of money.
That's right.
Right.
And
There's always the exception.
yeah, and I think you make, I don't think I can add anything about the risks of penny stocks. And you make a great point about the alternative being mutual funds that are invested in these bigger companies at a more affordable price. But the other, and this has come up more in recent years, option for young investors who maybe don't have uh, enough money to say just buy straight up shares is, fractional shares is a new option that a lot of platforms offer. What would you say to a young investor looking to do that?
Well, I think the key word there is young investor. Let's change young to inexperienced. Okay. That could be a 20-year-old, that could be a 50-year-old. They haven't invested much. So do you want to think that you can go as an inexperienced person become the world's greatest stock picker right off the bat? You know, I still think it's best do some funds to start with, learn about the companies you're investing in, and then if you think, wow, I think Google is going to take over the world. I really would like to put more money in Google. Then invest in Google. Buy a fractional share.
It's nice to have the
But
mutual fund as sort of your floor, and then take that 10% and go make your picks, whether it's penny stocks or fractional shares in these bigger companies, right?
right, because yes, okay, We've talked about the different mutual fund companies you use. You have to be careful about their expense ratios. Some are very expensive, some are very cheap, and they're still big companies. So once again, you got to do a little research. It's your money. You don't just want to go, hey, let's open the window, throw it out, see where the money goes. You got to do a little research. It's not that hard with the internet. You can look up anything. So do it, and then just, go from there. I mean, and the expenses on the bigger funds from the Vanguards and that of the world are very cheap. They're very low. Much less than 1%. So if you put your money in with an investment advisor at a firm, especially if you're a smaller investor, you're probably going to get it 1.5% a year fee to start with. So, the saying, there is no free lunch. Yes, there's a free lunch if you do it yourself. But then where the cost is going to come in, and is in your education, I think.